Hey traders, today is Thursday, February 22nd. Here on this short week that we've had so far. This weekend was a long weekend. Monday was off. Tuesday was complete no-show of volume and range in the market. Wednesday was no better, maybe just a little bit better. And today I think was a little bit worse than yesterday. The point is we're going through a little bit of a dry spell right now in the small cap markets. These small cap markets are usually running quite a lot. We usually have quite a few movers. So let me just show you some of the movers from the past here. I've just got a whole bunch of these screenshotted from the past. And you can see that the types of moves that we used to get, but not anymore. So I think what's happening right now is we're just sort of waiting for the volume to return. The S&P has been selling off. The markets have been turning down a little bit, which I think has put a lot of pressure on these equity markets, especially the small caps, as people are focusing a lot more on the bigger name movers, as well as where we are technically on the SPY. Like this is BSPM from earlier this year and last month actually, and you can see that just in the pre-market session, it was a move from $2 and then in the morning, well before lunch, all the way up to $6. And that's the type of move that I look for to begin getting into a short position and just riding this thing really down the entire way. So we haven't really been able to play a lot of our trades because of that. But staying patient and sitting on your hands and knowing when to get in is just as important. If not, this is a really good test, a really good exercise in patience and dedication that you have to your own trading plan. So I was talking about the S&P 500. So the S&P 500, if we go over to the SPY here, you'll see the daily chart. Now let me actually show you something that I used to be a futures trader, so I keep track of futures quite a bit. And I'm going to go out to the weekly here, just so you can see what the S&P looks like from a larger time frame. So from a higher time frame, we've got the S&P here climbing all the way. Basically since 2008, the 2008 crash, if you bought the S&P, you'd be up non-stop here, year after year after year, without a real pullback. The only real pullback that we had was in 2016 at the end of 2015. And so what you do in this type of technical analysis, or what you can do, is you can take something called range expansion. It's a fairly basic way of dividing up markets and charts, and basically take the last range the price was in, that it was trading in, had difficulty breaking out of, and just times it by 2. And what you come up with is are some levels that end up a lot of the time being important, just because of how these charts move on a structural level. But anyway, so as I scroll the chart out, you'll see that the S&P was inside this bullish move all the way from 2011, where I pegged it, to basically last week or the week before, 2 weeks ago here, when we hit the highs at 2878, close to 2900. And you can see that what happened was we broke right out of this bull channel that price had been in for a while, creating another bull channel, accelerated out of that and began a 90-degree climb. And as soon as that happens, just like any small cap stock, we're looking for that emotional move before getting into a short position, and looking for that backside move to be created. And that backside move right here, this backside move, so this sorry, frontside move. This frontside move here has already began to roll over, and you can see that just like any other small cap stock that we play, we look for a pullback before selling off and risking against the high. And that gives us a nice entry opportunity. Now, obviously, we do a lot more analysis than just that to get into trades, but the S&P is beginning to look like one of our small cap movers. And you can see it's hit that high, that emotional peak, really overextended on the RSI, oversold, and it's pulled back and really just broken down, giving that emotional spike down, giving us a consolidation breakup, another consolidation, failure to make a new high, and now we have our first higher low here that could really accelerate to the downside. And as I speak, the S&P is having some trouble staying up right now. But anyway, that's a lot of talk about the S&P, but it's important to note because, so I go down to the hourly here. It's important to note because this is what we've been trading inside for the last week or so, is just this pullback that's come back in and just complete sideways movement, which is why I think we have such little range. But as these markets are tested and this range is tested on the S&P, I think we are going to either see price rollover or break out of this range, and I think that'll be the return of volume and range and volatility in the small cap stocks. Okay, so today we had one trade, and that was OREX. So let me just go back out to the daily so we can see this. OREX was basically the only chart that had popped up for me on my scanners that I was interested in trading at all. It had jumped from about $1.15 all the way up to about $1.60, which is a huge range for this week apparently. And I wasn't going to let this one go, so I was looking for a couple things. A lot of the signs that I point out in the live room. A lot of the signs were here, and we took some of the opportunity of trading against where the distributions of volume were, trading against where that buyer failure was, and against where the ultimate failure squeezing out buyers was. And you could actually see that if you read the volume, if you read the strength meters, and if you watch the order flow, you can see these buyers beginning to lose momentum, lose gas, and that gives an opportunity for those sellers to come in and reclaim a lot of those levels. Now, I look for overextended charts a lot of the time, especially in a market like this, and that's exactly what we found here on OREX. Now, let me show you the trades as I took them. So OREX, before I show you the trades, OREX, as I scroll out on the daily chart, oh boy, going all crazy here, 1 second. As I scroll out on the daily chart, you just want to scrunch up your daily chart. Look at how bearish this move is. Look at how bearish this has been. Non-stop bearish move since when? Like it's been like 3 years. And now every time there's a pop in this stock, there's a sell-off. So there's the pop, there's the sell-off. There's the pop, there's the sell-off. Here's the pop that we just had, and what I was looking for was that continued sell-off. Now, it's always hard picking tops, but if you use a methodology like we do, it's pretty easy to find these things. It's just how good of an entry can you get, and then how good of exits can you pick. So the relative volume was very high, as you can see, as a background green candle, higher than the previous spike, higher than this previous spike here. So it was definitely a runner relative to how the rest of the market's been moving today. And so some of the trades that I took on this was I waited for price to make a move higher. Distribution of volume that it was creating here was being broken over and over and over again. We saw that there was a deposit of volume up above 150s, but price was unable to hold over 155. And that gave us the opportunity to watch the order flow and look for that exhaustion on the buy side. So this is a buying candle that was exhausted, completely exhausted buying candle that led to that top. The next push wasn't as strong, a lot of selling into that next push, and gave us a good opportunity to look to get in short. So I took a short position there and began to look for a momentum play to the downside. So the idea was to pull back and maybe add to the position at the VWAP, some kind of a move like that, and then continue down as this thing were to fade off for the rest of the day. Unfortunately, it did not do that, and about when it created that new low, an inverted head and shoulders pattern, that's when I decided to take my first profit. And then at the next push here, I managed to successfully pick the high, using the same method that I used to get into the position in the first place. And I was looking for the VWAP here to be broken, tested, and then really take off to the downside, hitting yesterday's close at 115. Unfortunately, it didn't play out that way. It started going against me and really curling up, looking for a breakout, and I didn't want to be any part of that short squeeze, so I sold the rest of the position there at 153. Now, I guess joke's on me because price ended up going higher and almost hitting the previous highs and then rolling off for the rest of the day. That's what I was looking for. This was the move. But I would have been a fool to hold over not only one, sorry, one lower high, two lower highs, three lower highs, four lower highs, five lower highs, and then continue to hold the position. That would have just been completely foolish. So sometimes you're a little bit late, sometimes you're a little bit early on your trades, but it's always important to just be consistent with your rules, consistent with your plan, know exactly how much you're risking. My risk reward was set right at the beginning, and there was no question as to what my risk was. I knew exactly where my 2 to 1, 3 to 1, 4 to 1 were. So that's my risk right there, how much I'm risking. And then I'm looking for at least a 2 to 1 to take profits, and I got a little bit less than that 2 to 1 right here, I think. That's why my exit was at 137. Price ended up going one tick away from 137 and reversing. But I managed to grab my a bit of a I guess 1.8 to 1 risk reward ratio, and eventually adding to the position and then coming out break even on that. Still up overall. But yeah, risk reward, super important. You just want to be able to take as many trades as possible with the capital that you have. It's as simple as that. So be consistent. The market will come to you. Wait for those trades to come to you. Wait for those parameters to be hit. And then it's just your turn to be an operator and just operate and execute your trading plan. All right, guys, good trading today. Hopefully tomorrow we'll have some more volume, some more excitement. See you again.